The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Joining us now to discuss El Salvador and more is Seth Melamed, Chief Operating Officer of Japanese-based global crypto exchange Liquid. Hey there, Seth. I think we've got your audio now. So tell me a bit about your initial assessment of the crypto markets right now. We're seeing a bit of a pullback after a run-up. We saw Bitcoin touch nearly $53,000 the other day amidst this excitement surrounding the El Salvador Bitcoin law. So what's your interpretation of what the markets are doing?
Sure. First of all, thank you very much, Christine, for having me on. And I wanted to say Shana Tova, Happy New Year to everyone out there. Listen, so we see Bitcoin starting to approach the previous highs that were reached back in May. And the news with El Salvador is sort of a confirmation of what's generally happening, is that Bitcoin is starting to get out into, the hands of the next billion users of the cryptocurrency. So, earlier, if you go back into last year in December, when you saw Bitcoin run up from, say, around 19,000 at the end of 2020 till at the peak, let's say in April, 62, 63,000, a lot of that was driven by leverage trading derivatives. But what you're seeing now is, not as much leverage positions, and you're seeing sort of what I would call real money. People that are, buying Bitcoin for, in this case of El Salvador Sovereign Wealth Fund, or people are just buying it through some of the greater accessibility that's been developing throughout this whole year, with different, PayPal apps or other sorts of easy ways to obtain Bitcoin. So I think what's really driving this price is just greater adoption and better accessibility by people all around the world.
That's a really interesting perspective, because at the same time, the law is not without its controversies, Seth. Nearly 70% of Salvadorans surveyed by the Central American University in a poll released last week either disagreed or strongly disagreed with using Bitcoin as legal tender, though about 90% also did not have a clear understanding of Bitcoin. So who do you think are the people that the retail people who are getting on board with this and are, experimenting with the technology?
Well, for sure, it's going to be the younger generation, people much younger than myself. My mom and dad, even though I've been crypto guy for maybe 7 years myself, my parents still don't even own Bitcoin. So I suspect it's a very similar situation in El Salvador. But perhaps what's also happening here is that the government is taking a longer term view about their own sovereignty, and in a sense, decoupling their finances from a US dollar based type of financial services system. And a lot of this has to do with education. We've seen it happen in more advanced countries. I believe in the US, we're probably in the higher teens of people that actually have Bitcoin, and maybe in developing nations it's still coming. And so governments have to look at not just where we are, but maybe where we need to go, and that's probably part of their thinking around adopting Bitcoin as legal tender.
Well, in El Salvador, they're certainly eager to get people to adopt Bitcoin. The presidential legal advisor, Javier Argueta, confirmed in an interview that it is mandatory to have an electronic wallet to receive payments in Bitcoin, despite the fact that the payment may not be received in BTC, but in dollars. Is this the right route to go? Is it sustainable, do you think?
Well, I personally don't think so. I think, what we've seen with different cryptocurrencies, they have different uses and different strengths, right? And the cost of Bitcoin transactions is still prohibitively high. So I do wonder about how the implementation of this is going to work when if people are trying to, buy some groceries maybe for $20, but they end up having to pay $10 or $15 in transaction fees if this really works. But maybe it's a start, and they may start to adjust and add in other currencies or other ways and lower cost ways of using crypto to transact. Bitcoin is probably not necessarily the best way to buy a cup of coffee, as we've learned. But I generally think that the idea of using blockchain is a right step in the direction, and maybe they'll evolve their framework and add in additional currencies over time.
And certainly there are those who are working very hard to develop Bitcoin sidechains like the Lightning Network to make those smaller transactions possible. And you sit from an interesting perspective in Asia. So I wonder, Liquid being a Japanese-based exchange, how are people in Asia looking at this? And do you potentially see Asia adopting Bitcoin as legal tender? Because I understand Japan allows Bitcoin for payments, but it is regarded as an asset and not legal tender. So maybe you can explain the nuance and differences.
Sure. That's right. So Bitcoin is an accepted form of store of value in Japan, and people do use it. However, it's still not something you can often go and pay for your dinner with Bitcoin yet. In fact, there's probably less Bitcoin ATMs in Tokyo today than there might have been a few years ago. That said, the interest in crypto as an asset is continuing to increase in Japan as well as broader Asia. What we also see, though, is a lot of interest in people finding ways to use crypto as a method of savings and generating yield, especially in low-yielding countries like Japan, where you have either zero or low interest rates. There is an appeal of cryptocurrency with staking or lending that they can actually get a better return on their cryptocurrency holdings than they could get on their yen holdings, for example.
Well, they even have negative rates. So in that environment, when you do want to earn yield of some sort, is the crypto markets the gateway?
It certainly is, and which is why we're really bullish on our business, and we're bullish about the next sort of products and services that can leverage off of all the different things you can do with crypto. And the crypto has that scarcity principle that allows people to sort of preserve wealth in an environment where fiat, may not be the best store of wealth over the long run, as inflation and other things start to happen with currencies.
Mm-hmm. Now, a couple of weeks ago, Liquid suffered one of the biggest hacks on a crypto exchange in recent history. $90 million was stolen by a hacker who has been taking steps to cover their tracks. Public blockchain data showing that $20 million was sent to an ETH mixer. Some ended up on Uniswap, Huobi, Binance, and Poloniex. Perhaps you can explain what happened for our viewers who are not familiar.
Sure. So, Liquid has always been a very innovation first type of business. We started adopting a technology called multi-party computing technology in 2019. And one of the key aspects of multi-party computing technology is that the private key is never held by a single entity, either a person or a server. Unfortunately, on August 19th, when the hack occurred, the villains were able to construct the private key and make unauthorized transactions out of our cryptocurrency wallets. We conducted a full investigation to understand how this occurred. We've been working with law enforcement, regulators, our customers, to really understand what happened and to limit the extent of the damage. From the 19th, we have had some success working with the broader crypto ecosystem to recover some of those stolen funds. We also worked very hard to, of course, identify the attack vector with our technology partners and cybersecurity experts from around the world to help us rebuild our infrastructure, and actually got our exchange back going within 1 week of the actual incident occurring.
So from a security standpoint, I'm just shocked that this could happen, with the encryption involved in blockchain technology and such. So what can be done to prevent this from happening in the future?
I can assure you, Christine, I'm more shocked than you are. When I was first told this happened, I was actually in the U.S. I had spent the day at the beach with my girls. That we were in Hawaii, and I didn't have Wi-Fi when I came home. The first words out of my mouth were, "This can't happen," but it did. What can we do? Well, unfortunately, in a crypto exchange where you've got hundreds of millions of dollars, it's always going to be a target of villains. And these, in our case, it was a very well coordinated, very well funded a group of individuals that didn't just stumble into this. There was a long time planning. What can we do? I think the first answer I would say is, if you are trading on an exchange, and that is oftentimes the best way to source liquidity and access crypto for anywhere from people who are first experiencing crypto to people who've been trading for a long time. Know your exchange and know if they're taking certain practices. One of the first things to understand is your exchange regulated and licensed? If so, in a case like Liquid, which we are regulated in 2 different jurisdictions, your chances of recovery of funds, if there is some sort of black swan event, is much greater than if you're trading on an unregulated, unlicensed exchange. The second thing I would say is, understand what the security policies are at the exchange. Do they do regular penetration testing? Do they apply, a sufficient team to be in charge of security? Do they have things like bug bounties? None of those KPIs, if you will, are guarantees that, the exchange you are trading at doesn't get hacked, but it certainly lowers the risk. And in the case of a licensed regulated exchange, even if there is to be sort of a tail risk event like what would happen at Liquid, the chances of getting full restoration and not actually suffering any losses are much higher. So in the case of Liquid, we were able to, with some partners in the industry, ensure that clients didn't suffer any losses from the hack that had occurred.
Okay. And it's interesting that despite the hack, some of the money is being traced, and you think that there may be some potential for some recovery in the long term down the line. But my other question is, are people vulnerable? Is the risk of in developing nations like El Salvador adopting crypto at this time when it is still a novel technology, potentially a bit buggy, especially with DeFi, do the risks outweigh some of the benefits?
Well, that's a great question. As someone who really believes in blockchain technology, decentralization, I do believe the benefits outweigh the costs. It's really incumbent upon the people participating in the industry to improve the accessibility, and that is happening. The amount of investment that's happening to make the tools to access crypto more secure, more user-friendly is going at great pace, and I think that's going to continue to happen. I do believe in the vision where people will be able to be self-sovereign and controlling their funds with wallets. But it also means that we have to spend a lot of time doing education and making sure that all ends of the spectrum are being served by the development of the technology, not just the DeFi degen using MetaMask and scripts, but even the people maybe are just downloading a wallet, that the tools make it secure for everyone to access this wonderful new technology.